how to buy a home with student loan debt. Hey there, it's Tony Popat. Before we get started, make sure to hit that like button and subscribe to my channel for more real estate tips, especially if you're a first-time buyer navigating the home buying process with student loan debt. Today, we're talking about a common question: can you buy a home if you still have student loan debt? The good news is, yes, you can. Student loans don't have to stop you from becoming a homeowner, but there are some important factors to keep in mind. Let's go over how student loans can affect your mortgage approval and what steps you can take to make the process easier. Can you get a mortgage with student loan debt? Yes, you can. Having student loans doesn't mean you're disqualified from getting a mortgage. In fact, most home buyers have some kind of debt, whether it's student loans, credit cards, or car loans. However, lenders do look closely at your debt-to-income ratio, DTI, when evaluating your mortgage application. What is DTI? Your DTI ratio measures how much of your monthly income goes toward debt payments. This includes your student loans, your new mortgage payment, credit card minimums, auto loans, and any other monthly debt payments. The lower your DTI, the better your chances of qualifying for a mortgage, as it shows lenders you can handle additional payments without being overburdened. How to improve your chances of getting a mortgage with student loans? If you're ready to buy a home, here are a few strategies to improve your chances of qualifying for a mortgage even with student loan debt. 1. Consider all loan types. Different types of mortgages come with different requirements, and finding the right one can make a big difference. Here are a couple of popular options. Conventional loans. These are the most common loans and require a minimum down payment of 3% and a credit score of at least 620. However, lenders generally prefer that your DTI ratio be below 50%. Government-backed loans. If you can't qualify for a conventional loan, look into FHA loans or VA loans. These loans are backed by the government and are more flexible with DTI ratios. For example, FHA loans can sometimes accept a DTI as high as 57%, and VA loans can allow up to 60% for qualifying veterans and active duty military. 2. Lower your debt-to-income ratio. If your DTI ratio is too high, you can improve it by focusing on paying down some of your debts. For example, paying off a credit card or auto loan might lower your DTI quickly, freeing up more room in your budget for a mortgage payment. Alternatively, consider putting extra money toward your student loans to reduce your monthly payment. This can also help lower your DTI ratio over time. 3. Increase your income. Another way to lower your DTI ratio is to increase your income. If you're able to work extra hours, take on a side hustle, or secure a promotion, your higher income will make it easier for lenders to approve your mortgage. Just remember that lenders will want to see steady income for at least 2 years, so it's important to show a consistent work history. 4. Apply with a co-borrower. If your DTI is still too high or your income isn't enough to qualify, consider applying with a co-borrower. A co-borrower's income and debts are considered alongside yours, which can improve your chances of approval. Just make sure that your co-borrower's DTI and credit are in good shape, too. 5. Look for a more affordable home. Sometimes, the simplest solution is to look for a starter home or a more affordable property. Buying a smaller home with a lower price point can make it easier to qualify for a mortgage with a DTI ratio that fits within the lender's guidelines. Should you pay off your student loans before buying a house? This is a big question for many buyers. The answer depends on your specific situation. Here are a few things to consider. What's your DTI ratio? If your DTI is too high for mortgage approval, paying off your student loans or other debts could help. However, if your DTI is within acceptable limits, you don't need to rush to pay off your loans before buying a home. Do you have enough savings? If you don't have an emergency fund or enough savings for a down payment, focus on building your savings first. Lenders will want to see that you're financially stable before approving a mortgage. How are your student loan payments structured? If you're on an income-based repayment plan, talk to your lender. Your payments might be low, but they could still count toward your DTI ratio. Final thoughts. You don't need to be debt-free to buy a home. As long as you manage your debt-to-income ratio and have a clear understanding of your finances, you can qualify for a mortgage even with student loans. Whether it's exploring loan options, paying down debt, or increasing your income, there are steps you can take to improve your chances of approval. If you're ready to start your home buying journey or need help navigating the mortgage process, feel free to reach out. I've included a calendar link in the description below where you can book a no-obligation meeting with me. We can go over your situation and come up with a plan to help you buy a home, even if you have student loan debt. Thanks for watching, and don't forget to like and subscribe for more real estate tips. See you next time.